Well, Uber and Lyft drivers around the world are striking today, protesting the ride-hailing giant's employment and pay practices as Uber's IPO looms just days away. Uber drivers earn the equivalent of $9.21 in hourly wages, according to a new EPI research report. So joining us now to discuss more on what is needed here is Rideshare Drivers United volunteer organizer and a Lyft driver herself, Nicole Moore. Nicole, thanks so much for taking the time from the front of the picket lines to join us. I want to ask first, though, what is this strike all about, and what has drivers out there in California so fired up?
Well, you know, a lot of us have started driving many years ago, and we could actually make a pretty good living. At this point, though, where we're at is they go lower and lower in a race to the bottom on wages. And it's really not the passengers' payment is still good. What's happening is they're taking a larger and larger percentage of our wages. And, sometimes we're seeing 30% of a fare. The truth is, none of us can make a living doing this work this way. They're putting the squeeze on drivers while they're making billions. And, Uber's IPO is right around the corner. And we want to make sure that Uber and Lyft and the investors know that this is not going to work this way. It's not going to work for anybody. You can't have people making billions and having the people who do the work, who take people to their jobs, take people to their doctor's appointments. And you can't have us making absolutely not enough money to live. And that's why folks here, we're actually lined up to get on a shuttle to go to LAX, where we're going to be picketing with a lot of our coworkers because
yeah, workers on the move there. I also want to just highlight Uber's response to all of the questions you are raising. Their statement reads, in part, drivers are at the heart of our service. We can't succeed without them, whether it's more consistent earnings, stronger insurance protections, or fully funded 4-year degrees for drivers or their families. We'll continue working to improve the experience for and with our drivers. But Nicole, I just want to get your thoughts on, obviously, maybe some investors and some board members obviously are getting paid here very handsomely. The companies themselves, though, not profitable yet. So when we talk about paying drivers more or potentially reducing the company's cut of these rides, in your mind, what needs to be done here? Because also these companies say they can't actually continue to operate if they do make workers, full-time workers and pay them accordingly. So what are your thoughts there?
Last time I checked in New York City, they actually implemented making $28 an hour, which after expenses and after taxes is just minimum wage, $15, $16 an hour, right? And they're still operating there. In mature markets like we are here in LA and San Francisco and New York City and DC, these companies are making hand over fist profits. Their choice is to invest that money everywhere except the drivers. That's not a sustainable model. They have to minimally follow the basic labor basic labor standards in the United States. People in the United States, we still believe that if you do an honest hour's work, you deserve an honest hour's pay. And right now, minimum wage in California is $15 an hour. Most of us are making less than $9 an hour after expenses, gas. Gas is going up. Guess what? We're getting less and less money, even though gas is going up.
So, Nicole, there's supposed to be protests throughout different cities throughout the country. Estimated that 10,000 Uber and Lyft drivers will be striking. What is the scene on the ground? Are you guys creating some kind of brotherhood? Are you really upset? Like, what's the mood?
It's a brotherhood and sisterhood, I would say.
Sisterhood.
But absolutely. Most of us, our only relationship to our job is on our phone, right? And we have to break down that isolation. And so that's what we're doing in all of the major cities across the United States and across the world. We're building direct relationships with each other because we're building an organization so that we have a voice. Nobody's listening to drivers. The rooms where these decisions are being made, whether it's being made with our elected officials, whether it's Lyft and Uber making the decisions, drivers are not in the room. We need to have a voice on this. We need fair wages, and we need our lawmakers to stand up to these companies and say, you have to follow basic labor regulation in this country.
All right, Nicole Moore joining us from Los Angeles. Thanks so much for taking the time, and good luck as you
All
make your way
right,
over to
you guys.
LAX.
Let them hear us.
All right, thanks so much.
right, thanks a
Meantime, we are seeing Lyft stock tumbling today despite beating revenue expectations. The stock, as you can see there, is off close to 7%. The company posted an adjusted net loss of $9.02 per share on revenue of $776 million for the quarter, nearly doubling revenues from the year-ago quarter. Guys, when we talk about this company, Lyft CEO says the company is on a clear path to profitability. That's been the main question.
Yes.
But I just want to highlight a couple of the other things outside of just earnings per share and the top-line revenue numbers, because riders surged 46%, active riders, that is, year over year. They beat on EBITDA, less than expected loss there. They beat on an adjusted net loss. They beat on Q2 guidance, and yet we're seeing the shares off 7% here. So what's the story when we look at Lyft?
It really comes down, and we were talking about this before. I mean, you can't get around having a path to profitability. They really have to prove that they can do that. But the good thing is there's potential. So soon after they came out with their earnings, Alphabet's Waymo, so the self-driving company, came out and they said that they have a plan now with Lyft over the next couple of months where they're going to have 10 these Lyft taxis available to consumers. So if that really works, then the self-driving market could be Lyft's new path to profitability.
It's the first partnership for Waymo, but I mean, as we just saw, there's a big question mark with the drivers here, Ryan. I mean, what other questions are facing this company?
Yeah, no, I think that plays into it because let's face it, like $1.1 billion in losses are annualized for, I think it's another 5 years before profitability is even a question. And now you have their biggest overhead complaining that they're not getting paid enough. Speaks to that there's a real problem with this business model in general, and I think that's going to be a problem moving forward, because at the end of the day, like, you got to see prices go up to the end consumer, because if your biggest cost is complaining that wages should be higher and that's where they need to actually cut costs, that concerns me greatly.
And yes, they really do need to raise that number even higher when it comes to active drivers. So they're saying they have 20.5 million, which is higher than the 18 million they report over the past 2 years. But yes, if these active riders, exactly. So if you've got these protests keep going on, people are going to be reluctant to even want to get onto the Lyft app and become drivers.
Good point. It's not exactly the positive PR push you need, but they did highlight two things when we're talking about this earnings call. Outside of the Waymo partnership that you did mention, Sabeel, they also mentioned a couple other things, one being that 2019 will be the peak in losses and then slowly rising towards profitability. So if you believe that, that's a good sign to hear, I suppose. And then also outside of that, there are a couple other things that they highlighted as well, mainly being the fact that they continue to see people in the healthcare space, maybe people who can't ride to the hospital, continue to use Lyft in these services as again, transportation as a service, kind of get them around.
Yeah, and that's kind of like dreaming of the future, which is great, but that's not something tangible. And I also think, in addition to that, are we really going to have autonomous cars like tomorrow? Like, I feel like it's going to take a long time before people embrace it. It's kind of like, cord cutting has just become a thing, and we've had streaming TV now for like a decade or more, right? So I think it's just one of these things that I really don't see autonomous driving happening like tomorrow. And I think that's one of these things people think we're going to be betting on very soon.
Yeah, but and a lot of CEOs have been, using we're going to be having self-driving cars very soon as a, big revenue driver. Even Elon Musk has said robo-taxis by next year. And meanwhile, he was reporting a loss with his company.
That's a good point. But at least in this case, that would help solve the problem that you raised just a bit ago. With drivers wanting more, you eliminate the driver, which is kind of an awkward thing that was in their S1 when they were going public. If we eliminate the driver, we'll be much more profitable here, and that's it's kind of the elephant in the room as we talk about that company.
Totally.
But while we're talking, it's a little awkward moments, but we'll leave that there for now.